Alright guys, thanks for joining. Just 2 minutes while I tweet out that we are live. We'll start in about 5 minutes or something like that. Alright guys, thanks for bearing with me while a few people joined the chat. Right, so today we're going to talk about our favourite subject of Bitcoin. Just as a reminder, this isn't financial advice. You really need to be doing your own research and so on. It is simply my humble opinion of what is going on in this market. So yeah, plan is we're going to go through the Bitcoin chart, look at it on the higher time frames, look at it on the basically go back through what happened recently, see if there's any learnings there, and then look at some of the on-chain stuff, some of the cyclical stuff to try and work out actually where we are with regards to some of the more structural stuff in the Bitcoin land. And then yeah, we'll get into the lower time frames and see like what's going to happen in the very near future. I will keep an eye on the chat. If you do have anything you want to ask, I will try to catch those questions. So let's just go back in time a little bit first. I think it's always useful to set the scene, to try and remember, what it is, where we've come from, and what we're up against. So Bitcoin obviously had fantastic run up. You don't need me to tell you that, but that all came off the back of the COVID crash. And would we have had the run up anyway? Probably some form of run up was always in the works in the cycle. That's what we were always expecting to happen. We just so happen to have the extra bonus of stimulus coming in from the Fed and other governments, which was great timing when lots of people were able to sit around, do nothing while they were locked up, and they all got to learn about Bitcoin and crypto, which was really good for all of us longer term holders. Since then, the money printing's obviously all caught up with us a little bit, and we have gone into a land where we've decided to, or not we, but we've decided to have a big conflict basically in the world, and what was in inverted commas called transitory inflation, which was sort of the idea being that inflation was just going to last a short period of time, and that was just due to a breakup in the supply chain for a short period. But instead, what's actually happened is the money printing's caught up with us, but also we've decided to go and have this conflict. And what that conflict's actually done is it's created a structural issue in supply chains, and created an actual macroeconomic event, which has never been seen in my lifetime, for one. And as a result, reduced supply, aggregate supply in the economy moves in, which ultimately means that the producers of goods and services are unable to provide goods and services at the same prices they were able to before, because they simply can't get their hands on it. As a result, we get what's been called the cost of living crisis, and basically people have just got less money. So we've got also the Fed tightening, meaning that interest rates are going up. So if you've got debt, that's going to get more expensive, which is particularly bad for businesses, which will suffer as a result, as they won't be able to keep up with paying the debts or take on new debts to grow. So the Fed's in a real shitty situation, where they've kind of blown the load already and they haven't got any more bullets left, and they need to protect the dollar. But all of the other currencies in the world have got the same issue, because, simply put, inflation being caused by supply side issues, which they can't avoid. So a bit of an unknown as to how we're going to get out of it, but that does impact this market. For a long period of time, we've seen the NASDAQ correlation with Bitcoin pretty much go in lockstep. So here we have Bitcoin being the orange line, NASDAQ blue, S&P 500 white, and it could just be a one-for-one chart pretty much going all the way back to the start of the year, and even further really, if you actually look, take into account the COVID run-up. So from an economic point of view, not great. Less money going around, squeeze on people's disposable income, effectively, meaning that day to day people are going to have less money to spend on things such as crypto and the like as well, which is particularly bad for a retail sector asset like Bitcoin and crypto generally. So for the best part of, since basically January 21, so bloody long time ago, we've been stuck in this range between basically 60 and 30k, bouncing around. Obviously still a lot of spot buying going on off the back of like Elon Musk and Saylor, who was never really giving up on his purchase spree. And then we got the Coinbase top, basically, where I believe the market was probably held up to maintain the share price a little bit, going into the IPO. And then, we got the sell-off, and then derivatives basically drove us back up to reach all-time highs. And then since then, it's been pretty much down only, with, a period here where we've basically consolidated into what is, quite reasonable to say a bit of a bear flag. So that really brings us back to what's likely to happen with Bitcoin here, and it's obviously complex, and we're going to go through various different things, but the backdrop is what it is. There's no way to sugarcoat the macroeconomic picture and what the influence of that may be on risk on assets, and just every asset basically. I don't want to sound totally doom and gloom with it. I do believe that the outcome, if we do go into a bigger financial crisis or a bigger macro or geopolitical issue, and it takes a long time to get over this conflict in the Ukraine. I do believe that, there's going to be a really important place for unconfiscatable, permissionless money for the sovereign individual, which has a long-term monetary supply, because if we do have a big issue, the banks are going to have problems and people aren't going to know where to put their money at all. So, Bitcoin, I still believe, has very strong value. And look what happened last time we had a big dump. It was actually one of the best things that happened for crypto, ironically. So, it's a game of survival. Some of this stuff will be interesting for hodlers. Other parts of it, it's very much, about risk management here. So, a few things I want to have on the chart as well is that we have the US midterm elections coming up. I'm going to refer to our website, decenttrader.com, a few times on the way through this. We have events on the calendar, such as Fed meetings and, ETF decisions, and when we have the PBOC meetings and so on. But one big event that's coming up is the US midterm elections, and historically that has generally been a positive push coming out of that period. And going into it, because there's that requirement, to justify the reins which whoever's in control has at the helm of the US. So likely to be potentially some sort of good stuff going on in quarter three of this year, or at least running into quarter three. So even if now is pretty tricky, I do think that this is a very important date to have in your calendars towards the end of the year. So we'll just quickly look at sort of where we are now. So obviously we're at the bottom of this range, which isn't ideal. I also mentioned there's a bear flag, which typically have a breakdown target here of just sort of sub 20k. So that is what it is, and I'm not going to sugarcoat things. If you don't want to hear the truth, then maybe this isn't for you. But there are a few indicators I want to go with this. So we've got the moving averages. We lost the 100-week moving average, the green line. Actually, I should really do this one by one. So we lost the green average, which is the 100, which is typically what we've seen actually when we're sort of at the end of the sort of post parabolic consolidation. You get that breakdown, and happened various different times, and we are having that now. We did come back and bounce off 150 week. Now that's quite important, because the same also happened on the Nasdaq. So this is something I was sharing on Twitter. The correlation was quite important, because you could basically forecast where Bitcoin is likely to get to, based on what the Nasdaq's done historically. So just a quick diversion to look at the Nasdaq. You can see historically, the Nasdaq's 150-week moving average has been pretty important, like right on the nose pretty much. It's bounced off that, if not the 100-week, for some time. So basically since post major sell-off back in the 2000s. So 150-week moving average, really what I was referring to as a scary correction. Based on that correlation with Bitcoin, that suggested Bitcoin would be about 30k. And had we not had the lunar cock up, I believe that we would probably be at 30k anyway. It's in the charts, and also the correlation was saying it was going to happen, and see above when referring to all macro stuff. So we are pretty much where we should be with regards to this scenario. Now, what else can we look at? We had COVID selling off to the 200-week moving average. So we know that the realms of possibility could be that there's another leg down. Now, if you do go and do the calculation, it says that Bitcoin would be at 20k if that happens. So it's quite important. I will briefly have a look at the Nasdaq. You can see obviously here we had around 12,500 points as well. I was talking about on Twitter as important level, and you can see it's been basically very key resistance turned support over here, and unfortunately it looks as though that is getting rejected at the minute. So that was the time to short 12.5k. But we need to see, can it double bottom here? I mean, I'm a betting man, and I've got to say I'm not exactly bullish on the Nasdaq at the moment. You have to think about the Nasdaq. A lot of the revenue that the companies in the tech sector make comes from advertising, and if the consumers aren't going to be buying stuff, advertisers aren't going to be spending money, so their revenue is going to contract as well. So not ideal. Potentially Nasdaq, it's in the realms of the possibilities that it goes down to 10,000, 11,000 points, which I would expect Bitcoin to be at 20k. Just discarding everything else. Whether or not the on-chain indicators are saying this, that, and the other, it's irrelevant at the moment. We're in lockstep with this market, and you just can't avoid that until we get the big sell-off, hopefully, and not hopefully. If we get the big sell-off, things might divert a little bit. So that's the Nasdaq. But yeah, let's just quickly take a look at Bitcoin on what else might tell us where we may find a bottom. So I'll take off the moving averages, and we will have a look at what there's a few indicators here I'm going to talk about that are just on my profiles on TradingView, which you can pick up for free. So this is what I refer to as XMA deviation bands. You can fiddle around with the settings all you want, but really what it is there's a 20-week moving average here, and then there's bands which deviate on either side. If you historically go back and look at this stuff, 2018, it picks the bottoms basically when you deviate from that 20-week moving average pretty nicely. That was 2013, wasn't it? This is 2018. Even the nuke back in January 2018, if you remember that one, that was fun. And then also back in March 2020, picked the bottom, and here we are almost at it, but it's rapidly declining. I haven't actually really got into the meat of it yet. So that's currently stuck between 20 and 24k. So that's kind of telling us that, if we do sort of have a bit more downside, that could be potentially somewhere to pay attention to. And then, that's really it on the short-term stuff. If we just quickly look at the weekly oscillators, Terminator, this is one of my beloved indicators. There are various references to Arnie through this. I have unfortunately neglected him somewhat over the years. Bit of an inside joke, but never mind. You can see this is obviously accelerating with negativity here, which isn't ideal. RSI below 50, down below the trend line as well, moving average. MACD negative, expanding on the histogram. I'll come back to this one in a minute. OBV, absolutely wrecked. Normally pretty good at telling you where the market's going to go because it works with volume. We'll come back to the long-short ratio in a minute. So oscillators wrecked. Right at the bottom of the range, macroeconomic picture is shit, unfortunately. So one other thing that I will just mention is I have been working on something experimental, the Pi Cycle Top, which my partner Phil Swift, not like that, not a partner like that, but we work together. He came out with the Pi Cycle Top, and it basically called the top pretty much on the day when the Coinbase thing happened. But anyway, I've been trying to sort of re-engineer it a bit and come up with a Pi Cycle bottom indicator, which just seemed to be quite good. Picked the bottom pretty much, not quite exactly the bottom, but this, it's not an exact science, this stuff. Around in 2018 and back here at the bottom as well. I haven't released this one yet because I just want to check on a couple of bits of things with the maths, but fundamentally, we're still a bit away from where I would expect us to be on that. So basically possible for more downside is the overall view, I would say, just looking at it from a technical point of view. Obviously, hopefully we regain this the bottom of this range here, and we need to see probably a few weekly closes above that to even start thinking about it, reclaim some of the moving averages, get them to turn around. Short term, you'd say there's you can pretty much split this up into four, and anything above sort of towards 36 is going to be extremely tricky. You can see that that acted as resistance, support, breakdown. So even if we do recover, that's probably going to cap it. One other thing to note actually in this market is, where's it gone? That's annoying. Basically, the yearly pivot is basically here as well. And the yearly pivot historically, let's see if actually there we do have it on. My mistake. So yeah, the yearly pivot was something that I've been tracking for a long time. Basically, in the previous cycles, once you lose the yearly pivot in the year following the bull cycle, it just caps price. So it happened that year, and it happened over here as well. And basically, it's exactly the same thing has occurred this time around. So the yearly pivot, reclaim that and game on, but until that happens, it's going to be tricky, to say the least. So just a little bit of a recap on what actually happened. So had the bear flag over here, started turning red on the 3-day predator. So predator is basically my kind of go-to indicator, which I use for pretty much all of my trading. So that basically turned red and we sold off. Now, one of the other things to note that was important, I was going on about it on Twitter, was that we had this we've got this liquidity that was stacked up below us, and really what I'm talking about with regards to liquidity there is the longer that you spend in a time period consolidating like this, the more liquidity is going to be built up below. Now, does that mean that everyone's leveraged? No. It means that people have psychologically, and a lot of people will have spent time getting into positions here. A lot of it will be on leverage, and that will accelerate and exasperate any downside. But, the fact is, the longer that you fart around sort of 40 and 30k, the more likely that you're going to have people getting worried when those levels are lost. So when we're at this level here, if we just go back in time a little bit, and we put on the liquidations indicator, you can see we had unsurprisingly built up all of this liquidity, which is basically the sum of all of this stuff over here, which has been untapped at a 3x. So I like to look at both 3x and 10x. This also does swing failure patterns, of which we do actually currently have. Obviously, you can't see it on a rewound chart, but yes, we are long liquidations of 3 are normally the ones that cause a big old bit of heartache in the chart. So you can see here, we came down. Actually, I'm missing something else. Just a moment, I'll go back. I will also add what I lovingly refer to as my Moonraker indicator, which is really just a play on words. It's like a mean reversion strategy, and it has built into it basically these support and resistance levels. So it supported us over here when we had the initial sell-off, but then the next level down, if we were to lose that, was going to be in at 25k. So if we add back the liquidity and press play, you get the idea as to, we've lost that, but yeah, it came down pretty much exactly to the level we were talking about, and the support came in and saved the day. So that's what happened. If you're not familiar with the idea that the time period, longest period that you spend somewhere, the more people are going to be burnt on either side when it eventually goes. That's what helps when it comes to these big old nukes when they come along. No pun intended. So yeah, 3-day. Obviously, it's my absolutely preferred chart. You can see it's just absolutely super clean, particularly on Predator. And what we don't have at the minute is we don't have a change in the candle. We do have a relatively long wick here, but I like to see a bit of turquoise come in, or teal, or whatever colour you want to call it. And the reason why is because underneath the code here, there is, it looks at volume as well. And unless you've got that really strong buying volume, then to me, we haven't quite seen the bottom yet. So some of the things to note while we're here, if you look at sort of all of the other places where we have big sell-offs, so here, what ultimately happens is you come back and you retest the lows. Here we had a big sell-off. We ultimately come back in some form or another and retest the lows. Okay, we broke lower as well that time. Here we sold off. We retested somewhere near the lows. Here, big old sell-off. Eventually, you sort of get near to the lows again. COVID sell-off, got relatively close to the lows, despite a really good old bounce before that happened. So we haven't seen that happen yet because the volume hasn't come in, and that is slightly concerning for me. I'm trying to play a really patient game here. It's easy to mess things up by trying to jump in. It's Bitcoin's below 30k. I need to buy in. Must buy in now. We had the capitulation. Need to buy in. Well, you're going to get shaken out pretty damn quick if it comes back down again, and you need to try and avoid that. So volume here rolling over on Terminator on the 3-day chart. RSI below 50. It is oversold, but it's it's not in a great place, is it? It has, having a moving average on the RSI is useful because you'll know when the trend changes. For example, over here, it broke above the RSI and there was an uptrend for a while until it broke. It actually gave you a pretty good exit there. Same at the top, that was pretty good, all the way down to the bottom nearly. So, these little oscillators can really help. MACD rolling over again, below zero. Histogram increasing, so not ideal. Also consolidated spot Bitcoin OBV, that's another one of my indicators you can just go and get off Trading View. That has also broken down. So searching for stuff here that looks good, but it's tricky. So there is one thing on the chart that it does look good, and that's the Finex long. So we shall have a quick look at that. Here, basically, so I did a little bit of maths, and you've probably seen people chundering on about it on Twitter, but basically Finex longs are all-time high. They're at all-time high on this chart. They used to be, back in the day, a website, bfxdata or something.com. I don't know what happened to it, but that had way more data on it and went all the way back sort of years and years earlier, the previous cycle, but we don't have that now, so I can't tell you whether or not this actually is the all-time longs or not. But yeah, it is extremely high, and what we can say is basically when we dumped from 60 to 30 last time, they basically absorbed a lot of that and then unwound their position as price went back up again. So they basically played that, like a fiddle, basically beautifully. They also bought up a shitload of Bitcoin here between, we'll call that about 14,000 Bitcoin or something. From sort of the time when Elon went long as well, and Tesla, and then we're now falling, and Finex longs are going up. Now if you go back through the chart, I won't bother now, but you'll see that basically the longs, when they go up, normally tends to be a good sign. Does that mean it's going to work every time? I don't know, maybe, but looking at, I did some sort of fag packet calculations to work out what the weighted average price of these longs is, and it's certainly, I got 34k. Someone did it on a bet on a more scientific method and got to 37k. So what we know is these guys are underwater on these positions, but it's important to remember, just because they've got 80,000 Bitcoin long on there, it's not like your plebs trading on any normal derivatives exchange. Like these guys who've got this sort of money, that are very unlikely to get liquidated in reality. I did post that they would be in trouble, at 3x or whatever, around about 22k. But the reality is they are not going to get liquidated. Like, I'm not going to say they're not, but it's highly unlikely that they would get liquidated. They would probably, claim their position, which is where they basically come and pay back the difference and close the position without having to market sell. So, they are long. There's not really much we can say about it other than they're rarely wrong. So that is a little bit of positive. One thing that I would say though is if we start going down and these also start unwinding, then the shit probably is going to hit the fan in that case. But for now, they are happy to just keep loading up. And as I say, these people are complicated or complex, or you have to assume they are anyway, and they're not just gambling here. And I would imagine it's certainly possible that like this is an offset to like them shorting as well. Like we just don't know. There's too much unknowns, and it's like basically like a conspiracy theory by trying to work out what's going on with that. So yeah, other than we know when they're down, sometimes they call it right. So yeah, overall, big picture, just from a TA point of view. We need to see price action really getting bought up above 30k. But the reality is, as I say, most of the time when we dump, we need to at least sort of get back down to, at least sort of test something a little bit lower. If people bought on the way up, or people saw this big wick, typically people pile in once they've seen a big wick and they're like, yeah, that was the bottom. But actually, those people need to have their nerves tested a little bit, and I suspect that we'll probably come down in one way or another along with the legacy markets a little bit lower, possibly in the next couple of weeks. But is it over? How bad is it, etc.? Well, let's get into a few other charts which aren't just on TradingView. So these are on the Decent Trader site. A lot of these are just available for you to go and have a look at yourself at your leisure. So this is a bull market comparison. It starts basically looking at, where the halving is, which I believe to be the right time to look at it. We're talking about cycles. The reason for the cycles fundamentally is due to the Bitcoin halving, in my opinion. You'll see other ones where they take the tops or the bottoms. I personally think that the tops, that's just a bit of an arbitrary thing to do. So yeah, from the halving, in my opinion, is the way to do it. And yeah, you can see ultimately, so this is the 2013 bull market in red, and then you've got 2017 in blue, and the most recent one's obviously the teal coloured one. And you can see we're basically sort of at days 738 of the cycle, which in other previous cycles was getting towards where you ended up with a capitulation. So it's just spooky how things kind of happen right on time in this Bitcoin sector. Okay, they're not identical, but things are pretty similar. And for me, a lot, if I had to point at somewhere on the chart which feels reminiscent of what's going on now, it feels like we're sort of in here doing this kind of thing. The sentiment's very similar, in my opinion, to what we have seen previously when we dropped from that 6k. So 30k is like the 6k potentially. Remains to be seen though, because the 6k level actually back in those days held up for ages. Like it just wouldn't break through, and it kept recovering. And it's certainly possible that 30k does that. I'm not saying, I am being a little bit doom and gloom here, but in those days you didn't have the Russia situation. You hadn't just had COVID. Everything wasn't just blowing up basically. So slightly different, but it's rhyming somewhat, which kind of makes us think that could we be in a consolidation through to something like the 1,000-day mark, which will everyone will start reaccumulating basically for the halving, or the smart money will anyway, and that's still going to be my plan, irrespective of what happens in between. Is you start loading up basically with 1,000 days into the cycle, and then you get to your new halving, and then off we go again, hopefully. So yeah, that's where we are for now. In terms of a bottom, I think I worked out in terms of days that actually takes us very close to where the US midterms are. I think that Marin on the one who talks about the stars and all of the, I forget what the terminology is, but I think she was talking about some dates around there. There's probably some retrograde or whatever they say going on around that sort of period of time. So I'm quite keen towards that Q3 of this year. I think Q3, Q4, I think things are going to start to get potentially fruity again. So that's the bull market comparison. You can see the events, as I said, on the site there. Here we've got the Fear and Greed Index, and well, you don't need me to tell you that people are fearful, because basically it's a measure of volatility in the market. And we have seen some pretty low scores. I mean, it very rarely gets below 10. I think 9's pretty much the worst we've seen it. So I was pretty... I don't know how I felt actually after this. It actually went okay for me, but it was pretty strange time. 9 back in those days, down here 11s and stuff. The problem is with this, it can be bad for a while. Like, we saw over here, there's like a cluster and time period of it being bad. So it might mean that we're getting close to a bottom, but doesn't necessarily mean the bottom's in. So we know the sentiment's bad, but it could be worse potentially for a bit longer. Spent out profit ratio, SOPR. So this looks at basically who's the extent to which people are selling at a loss in the market or at a profit. So with the green being people selling in a loss, and the idea is in a bull market, people selling, or certainly at the bullish part of the cycle, if people are selling for a loss, that's a buy the dip opportunity. However, you can see when you get through the consolidatory period after the run up, it starts flipping the other way. And actually, you can see at the minute that there isn't really a great deal of negativity going on there, which says to me, actually, we haven't had a capitulation yet. And I would expect to see that come lower if we are to have a capitulation. But it is what it is. And this is actually quite an important one here. This is the HODL wave. So what this is the number of, or the percentage of the Bitcoins which hasn't moved for 12 months or more. 12 months or more, yeah, that's correct. And, what we can say that is good is that 66% of the coins haven't moved for greater than a year. So a lot of people are hodling. Now, what we do know is that basically oscillates. So with the cycle, people will take profit on the way up. And what should happen near the bottom is that people reaccumulate as well. However, what it's saying to me, if you think about the time period here, so we're looking back to sort of the start of 2022, it started really ripping up. Now, if you remember, I was saying that actually we've been in this range for such a long time, since January 21. So that starts basically counting in all of the people who've bought within this window. So basically between that 55 and 65, there's about 10% of the Bitcoins, in my opinion, held must have been bought within the 30 to 60k range. So they have not capitulated yet, certainly not on chain. One other thing to mention is, of course, the good thing here is that there is a bit of a riding tide. We would expect higher lows each cycle because people lose the Bitcoin, hold on to the Bitcoin, people get, join the cult and all that sort of thing. Advanced NVT, so this one looks at basically the value of the Bitcoin network relative to the on-chain transactions. So it's like a measure of are we actually valuing this thing reasonably relative to the past and with regards to the number of transactions, how much people are actually using it. And what this is saying is it is oversold. So we are seeing a few things that are saying things are oversold, but the price might take time to catch up, or the network might slow down, for example. So this indicator, I used to quite like it. It has its limitations to some extent, but it does call local bottoms pretty well when it gets outside of the bands, which it is now. So yeah, it's bottomy according to that. Poel multiple. This one looks at the Bitcoin miners and how much revenue they've been making over the last 12 months. Well, how much revenue they're making now relative to the last 12 months. So I think that's quite important when it comes down to operating expenses, expectations for investors, businesses, cash flow. All that sort of stuff's important, particularly when it comes to capitulation and things like that. And obviously this comes down to this lower band here, and we are very much en route to that. And yeah, you can see we aren't quite there yet. So on the way, not there yet, is what I would say. So the theory would be that you'd get closer to that cost of production. So if this squeezes down, miners would just stop selling because they're not economically incentivized to do so. And also you'd get some capitulation of other miners. So maybe we need to come down further, particularly as prices come down. Miners, as I say, with operating expenses are going to feel the pinch, and they are holding a lot of Bitcoin at the minute. So we need to see what happens with that. Right, so rest of the market. So this is the Predator Thermal Vision. If you have Predator, so Predator is an indicator available, which we make available on Decent Trader. We've actually got 25% off at the minute. With that, you get access not only to the stuff on TradingView, but also to this scanner on the site. So fundamentally, when I start trading each day, I come and have a look at what's going on across timeframes, across all the coins, to try and identify if there's anything worth having a look at. Oh, look at that, it's useful. It says what color it is. I think that's for the colorblind people. I won't be a dick about it. But yeah, so basically it's a sea of red with not many outliers at all. Pretty much every single 3-day is red. Maybe there's a few looking like they might be bottoming, but yeah, not an ideal situation, I wouldn't have said, in the market with regards to trying to look for bullish positions. Commando, this is basically our algorithmic market scanner, which looks at the likelihood that a coin's going to go up or down based on millions of data points and that sort of thing. So again, this is where I come and I like to have a look at the scores. Basically below 1 means that it's bearish as hell, and then it goes as high as 3. When you get to a 3, it's probably time to sell. But once you go across a 2, there's a statistically significant opportunity for things to go up within the next 24 hours, which is why we like to use it. And Bitcoin, if you just have a quick look at that at the moment, where are you, big boy? Bitcoin negative 0.33, so that's not an ideal situation. And yeah, there's been basically no above 2s for ages, which is what you would expect to see in the short term. This is the foils indicator, so this one's free to access on the site. I recommend using it. It's been really useful of late. What this does is it looks at price, open interest, the weighted average funding rate. So that basically means adjusting the funding rate aggregated for open interest based on exchange. And then we also have the long short ratio as well, which is basically, this is something that gets completely confused all the time. And I'm not surprised, because even in crypto, we talk about it different to legacy markets. But the long short ratio here is saying how many accounts are long versus how many accounts are short. Now, yes, people will say longs equal shorts. That is correct on derivatives. You will always have the same number of value of open interest long and short, that it's a 1-for-1. However, not the same number of individual accounts are long and short. So if things are above 1, if long short ratio is 2, there's 2 people long for every 1 person who's short. Another way of thinking about it would be to do as a percentage. But anyway, you can look at each of these things in unison with price. So if price is going up and more people are going long, you would expect that to be the case. However, if price is going down and more people are going long, that means that people are getting into trouble, basically. Same with funding. If funding rates going really strongly positive or not moving at all, and price is coming down, that means that people are trying to go against the direction of traffic, which isn't going to work out for them as you'd expect. And then open interest, if price is coming down but open interest is going up, then that means loads of positions are opening against the direction of traffic. So you don't want to be standing in front of a bus when it's coming towards you, even though you want to get on it. It's that sort of mentality. But yeah, we get a conclusion over here as to whether things are bullish, bearish, neutral, whatever. And if we go and have a look at what's happened over the last 3 days, long short ratio 1.5, previously 1.3, so it's getting more bullish. Price down 3.5%. Last 24 hours, well, that's actually where the variance has occurred. So this works across all the different time frames. Last bit of 15-30 minutes looks okay, but Everything more than that's really not great. So, you know, a lot of people don't really understand open interest and stuff, but go and have a look at that, if you please. So let's get into the shorter, lower term timeframes. And I'll just basically outline kind of my strategy, which I have been using recently with the guys in Decent Trader, and it works like a charm. So I like to use the 1 hour predator indicator. You know, it's important to remember with any indicators and stuff like that are going to give you kind of an idea of what's going on, that you need to remember what the trade location is like. So you know, if you're getting up towards resistance, just because it's still green doesn't mean you're not going to start to take a little bit of profit, right? So basically there's been I'll try and just take a few things off here, but generally, you know, when it's green you're bullish, when it's red you're bearish. It's as simple as that, really. But that aside, what we also have on here is the VPVR for a given range. So what that tells us is the extent to which there's been price action, volume rather, at a given price within a given range. So the yellow line being the point of control, or where the peak amount of volume has actually taken place. So today you could see that basically we got to the point of control, it rolled over and we broke down below this trend line. One thing that I would like to just draw your attention to is, you know, I don't know if the technical term's correct, but these kind of complacency shoulders, where you see price, you know, moving up in a nice uptrend, breaks down, and then you hit the retest, and then that's where your short entry is, down from there. You can see the same occurred here, where you're in a strong uptrend, you break down, you retest, you get your entry, and then you make the money. And then again, what's going on right now, if we just reverse this out, we are here, and what might happen next, you know, if we bounce out of here, along here is going to be of interest, certainly something worth paying attention to, particularly when we have, if we just look at that value range again, we have the point of control there, and we also have this is the VWAP bands indicator. You can see again the VWAP and the TWAP is coming down pretty hard. So also actually the Moonraker one as well, we'll stick that on. So there's a shitload of resistance basically around 30k on the way back up. And so people who longed all this and longed sub 30 are probably going to think to themselves, you know what, I'll bail out here and see what happens, and that'll create will create the sell-off. But why do I like to call it the complacency? The reason is because people who sat through this will sit there. This is only for traders, by the way, like trading rather than, you know, it doesn't matter if you're hodling, but so yeah, the people who sat through this and it comes back up to 30k, they think, great, you know, 30k, we're back in the game, and then that's the complacency and it sells off. So the likely scenario, of course, here is that just a minute, the point of control is going to be, form like the middle of this range. So we've got quite a well-defined range here. What we haven't done yet is taken out the weekend low, and I think that Wall Street would be rude not to do that. You know, a lot of the positions that have been opened up here will have been with stops on this low down here. So you can sort of see the setup kind of potentially taking place. I'm not, you know, totally out of the idea. I mean, I change my mind based on the 1 hour chart at the minute. So, you know, I'm happy to change my mind in a few hours if we break above this 30k level, or if I get a signal on the predator indicator. But overall, I'm expecting there's probably going to be some sort of challenge to get across 30k again for the reasons that I say. And also, you know, in here hasn't been tested at all yet. So yeah, you can imagine where else are people going to have stops? Well, down here, that's the kind of right hand shoulder of this attempted inverse head and shoulders. So yeah, I'm expecting a bounce out of here. I've closed my shorts for now, and basically sitting on my hands. Looks very similar to this kind of bottoming pattern over here at the minute. So yeah, maybe we'll see a little move back up to 30k. As I say, short-term time frames starting to turn around a little bit. So something to keep an eye on there. And yeah, Predator generally 1 hour doesn't look great, 2 hour not fantastic. Just rolled over onto red. That could flip back again maybe. It's on an indecision candle at the minute on the 4 hour. 12 hour it's just about hanging on. 1 day's been bearish as fuck for ages. And then the 3-day chart, as we know, typically gets it right, is red still. So I mean, fundamentally that's it really. We've looked at the long-term stuff, looked at the macro picture, we've looked at some on-chain stuff, tried to understand the position of the market. How's everyone positioned? What are other people thinking? What are they not thinking? And yeah, so what we are doing is we are having a sale on our site. As I mentioned earlier, we're having 25% off the indicators and stuff, but I've really found it difficult to have a look at the chat. I will try and have a quick look through, but if you do have any questions, feel free to at me. Actually, there's one there. What do I think on MVRV nearly bottoming out? Let's have a quick look at that. So MVRV Z score. So this is basically how much in profit people are. And yeah, I mean, it's close to bottoming out, but it hasn't, and that is basically what my TA has been throughout. We've been down to 24k. We haven't bottomed out on a lot of the stuff which normally bottoms out at the bottom of a bear market. I'd like to say that we had bottomed out, but we just haven't. There's not evidence in these indicators, so people aren't in as much profit as they previously were. And it looks extremely similar to 2013, doesn't it? Massive run up, and we're kind of doing this here now and just slowly making our way down. As I say, similar again to that final consolidation in the 2018 bull market on our way down. Back at COVID, obviously people got washed out there. So yeah, it's a good sign, but it's an obvious sign because the price is going back to where is going to make people not in the money anymore. And they're saying their realized cap looks to be probably where we bounced, actually. Not too far off. I haven't got the actual price on there, but I've got the market cap. So that's my view on that one. Let's have a quick look here. Do I have set prices that I would layer buys, or do I wait for indicators to flip bullish? Well, one thing I would say is quite important. I had some great success buying the bottom here. If you don't believe me, you can ask the Decent Trader guys, because I was in a live stream when we did it. And also there's that story that I shared back in the day over here. And I'll go back to the analogy of not wanting to stand in front of a bus. Yeah, if the bus is coming at you really fast, you need some sort of information that is going to let you know that the bottom's in. Now, on both of these occasions, I did buy the bottom earlier without waiting for the turquoise flip. Now, the way that I did that was that I had a very close eye on open interest, because open interest and liquidations, they're the two key things. When you see a big implosion of liquidations, when you see a huge amount of liquidations combined with contracting open interest, what that means is that obviously people have been liquidated, but at the same time, so a lot of positions will close out, but at the same time, what's also happened is that the shorts which were short have also closed their short positions by using that exit liquidity. So all the people forced to sell, they buy and shut their short positions, and that as a result reduces the open interest. So if you're around and available to deal with that situation, that's what you need to look for, and that's what can sort of give you the confidence to buy big nukes. I should really stop using that word. But yeah, so would I just bid randomly, like hoping for the best around 20k? Well, one thing that we learnt in the COVID crash, and some people learnt the hard way, unfortunately, was that the 200-week moving average, it was sort of like a dead cert. Oh yeah, 200-week moving average will never go below that. Well, I'll tell you what, in a Black Swan event, anything's on the table. And that night of March, whatever it was, 2020, it was the most peculiar thing that's ever happened. Like the liquidation event was just insane. And yeah, we went lower. Now, is there a similar scenario? Well, I would say right now that the economic situation's like way worse than it was during COVID. At the time during COVID, it was slightly different in the markets. We were like having to limit down and stuff. And, trading was getting suspended. In legacy markets, every time Trump spoke, the price fucking nuked. And it was just like a bizarre environment to trade in. Could we get into that situation again? Yes, I believe we could get into that situation again. It is possible. And I've kind of learned that don't kind of, if everybody's trying to get in at the 200-week moving average trade, that's not a great sign. It's a slight concern. So would I put bids there? I've got a lot of free cash hanging around since, when we went red up here, to be honest. I've been out, like, trying to stay out of the market. Had some action in here, but fundamentally it's short-term trading. Will I just blindly, 2x leverage 20k? Absolutely not. Would I layer some bids into it on leverage? No. The reason is because everyone else is going to. So there's going to be a mass liquidation potential below that 200-week moving average that people just don't think is possible. People did not think that this was possible at the 200-week moving average. They would have 2x'd at 5,500. Where did we wind up? 3,600. Nearly they'd have been wiped out, and almost certainly would have panic sold on the way down, particularly when BitMEX was blowing up. So yeah, it's okay to bid a bit, I'd say, if that's what you want to do. Just don't over leverage yourself. Don't get yourself into a situation where you're going to completely fuck it up. As I say, if there is a bigger level of liquidity below that 20k level, we could easily go down to 15k, for example, or easily go slightly lower. So, another 25% drop. You saw what happened with Luna. Things happen fast. So if you take anything away from this, please, just be careful, and nothing's a dead cert in the market, particularly when things are coming down quickly. You need to be careful and apply basic risk management along the way. So that's sort of my view on that. So have I heard about the indicator? Yeah, open interest over market cap ratio. Well, yeah, I mean, to be honest, I've asked the guys to put that column on here as well. It's just one over the other. We've got the market cap you saw on the other stuff. So we've got that data, we just haven't put it on yet. We have got a load of stuff coming actually on Decent Trader, but I'll talk about that another time soon. But yeah, I mean, on Coinalyze it can show you the ratio between the market cap and open interest. So the idea being, if you've got a ton of open interest, but the market cap is generally, isn't much bigger than the open interest, well, that's telling you there's a big problem. So, and it is sort of topping out a little bit, or it has been recently. And yeah, you want to be getting in the market when everyone else is gone, really. That's not always true, but it's a little bit more nuanced than that. But the safer time to go in the market is when there's relatively low levels of risk, i.e. open interest, relative to market cap. And the higher it is, the more riskier it is. Just if that ratio is high, it's bad. It's pretty simple. Right. Don't think I can see any further questions. Nope. Can't see any more. Right, if you've got any questions that remain, please at Decent Trader and at me as well, and on Twitter, If you don't follow us on Twitter, we don't know what you're doing, but at Philb or at Decent Trader or at Decent Trader, either of those. If you don't follow me on Twitter, it's Philb across the board. Strong brand. Terrible name. But yeah, also remember to like and subscribe if you haven't already, if you can do that. I'm trying not to sound like a YouTube knobhead, but yeah, you got to say it apparently. But yeah, otherwise, thank you for joining. I hope you found that of relative use. And yeah, we'll do it again in due course. Ciao.